All right, guys. So welcome to this training. Today we are going to be talking about a very important topic because it's not just about technical analysis. You know, from what I can read online, and from what I know from experience, I can tell you guys that funding or capital is actually one of the biggest challenges most traders face. Most traders face the issue of capital, trading capital, right? A lot of traders face this issue. They don't have capital, they don't have access to capital, right? So I'm going to be mentioning the three basic ways that you can get trading capital or grow your trading capital. We'll talk about personal funds, prop firms, and then investor capital. Right? Those are the three ways I know that you can get funds to trade with. Either your personal funds, either you get from prop firms, or use what investor capital. Right? So those are the three basic ways. There might be other ones, that with zero, all those other ones that are coming out now, right? There are other ones that all those new ones. But those are the three known methods that you can access trading capital. Either it's your personal money, which you get from your job, your business, or whatever you do, your inheritance, properties, whatever you do, your prop firm, that is you buy a prop challenge, pass it. And of course, don't forget that prop firm now have accounts where you can take without, there are prop firms that you can take without evaluation challenges. So yeah, the prop firms that has no evaluation challenges. So those ones are also available. They call it instant funding, right? Those ones are also available now. For instance, Tentrade, right? So you can check the link in my description. You can check the link the link in the description to get an account if you want that one, right? So personal prop firm is no more an issue now because there are prop firms that have accounts where there are no evaluation. So you can get instant funded with Tentrade. Just use the link in the description to get funded without passing through any evaluation challenge. So just put it at the side there. So right, so you can have that at the top there. So now, how do you let me make this smaller, right? So now, let's also weigh the pros and cons of these methods. Um, Please, if you have not subscribed to the channel, do want to subscribe so that you can have access to our videos when they drop, and also show support because I check the analytics, and the analytics say that most of you guys are not subscribed to this channel. So do want to subscribe to the channel if you haven't. All right. So yeah. So let's talk about the pros and cons of this. Now, the thing you must know is that when it comes to proprietary personal funds, one of the biggest challenges of personal funds was higher risk. Right. This is one of the highest. Um, this is one of the biggest challenges of. Sorry. This is one of the biggest cons of this higher risk. Sorry, I made a mistake there. So it should be under the cons, right? So these are the issues, causes disadvantage. So what the cause of personal funds is higher risk. You take higher risk, right? Because now let's assume that you say, okay, um, let me let me risk my money now. So imagine you risk, maybe you have $100 account. I want to risk, you want to like make a living for your $100 account. You know that making a living from $100 is not very easy because you have to take higher risk. Because there's no way that you can make $60, $40, $80 without increasing your risk. You'll be risking as much as 10% per trade. That is one of the issues with what personal capital. You risk more of your capital to be able to make more because you can't make a living for $100 without risking more. But if you put this $100 in a prop firm, you now risk less. So we can say that one of the pros of this is what less risk. So we're going to talk about risk. So when it comes to risk, you're risking less in prop firms because that same $100 that you used to do was that you used to do was as you used to fund a personal account, you can use it to buy what a $10,000 evaluation challenge. So you can use it to buy what a 10K challenge, and if you pass the challenge, you get what $1,000 drawdown, right? So now let's do the maths. Now imagine that you decide that you're not going to deposit this money in your broker account, that you use prop firm. So you now buy a 10K challenge, right? Why you buy a 10K challenge? and you pass it, you now have what? 10% drawdown, which is what? 10% drawdown, which is what? About $1,000. So now, out of this $1,000, you can be risking even 1%, which is what this per trade. So you can say you only do what? You only invested $100 and you pass the challenge, and then you can now do what? You can be risking as much as $100 per trade and making more money with your $100 investment. So you can make $1,000 a lot of money with prop firms. So that's one of the advantages of prop firms over personal funds. You risk less. And of course, we still talk about risk from the investor capital angle. So when it comes to investor capital, it's also what less risk too. Because you're not dealing with your own money, you're dealing with investors' money, right? So when it comes to risk, it's a con for personal funds, it's a advantage for profits, and also an advantage for what investor capital, right? Now, another thing we'll talk about is what flexibility. When it comes to flexibility, it's actually what an advantage for what for personal capital because you can withdraw whenever you want, right? You can fund any, you can withdraw whenever you want. Whatever you want to do with the money, you can do. You can risk anyhow you want. There are no rules, right? When it comes to prop firms, they have rules. Don't trade news. Don't do this. Don't do that. Right? You can't trade 2 minutes before news. You must follow consistency rule. You must do this. You must do that. Right? So that is one of the disadvantage of using prop firms because you have to abide by their rules. So you have to stick by their rules. So there are rules, right? There might be strict. There are strict rules there, right? There are strict rules when it comes to prop firms, right? There are strict rules. You are not flexible as you want, right? So that's what you know. When it comes to proprietary firms, you're not because of it's their capital, right? So when you're using their capital, you have to be through their rules. When it comes to investor capital, too, the rules are not so strict, but there are also what medium rules, right? When it comes to investor capital, there are also some rules too. So they're not really strict, but there are still rules. Some investors might give you some rules. Don't do this, don't do that, right? But it depends on your agreement with them. So the rules are not really strict. They're just medium. You cannot be extremely flexible with investor capital. For instance, now, if I want to withdraw this morning, like when I have some funds in my account, if I want to withdraw this morning, I can simply open my personal account and just withdraw now without consulting anybody. But when it comes to investor capital, I have to contact the investor. Please, I want to make a withdrawal. The investor will have to do is make a withdrawal and then send me what my own cuts, right? So I feel that investor capital is a bit limited, but the rules are not so much because they are not draw down all those things, right? There's no news rule, all those things because you have to discuss with your investor. And of course, I must state this before you collect investor capital, have what a laid down agreement. Right? Don't go and collect someone's money without an agreement. Have a laid down agreement that's written what? With professional supervision, right? So whenever you're having an agreement with an investor, have a lawyer to draft an agreement that is in your advantage and also in the investor advantage. So you guys should discuss your drawdown rules, discuss everything because it has to be between you guys. How much you'll be giving him at the end of the year, how much returns you're expecting. So always have a professional supervision there. A lawyer should be there, right? Someone that is knowledgeable about those kind of things must be there, right? So you will end up in prison, right? So don't collect someone's money without consulting a lawyer, right? Have a lawyer to consult before collecting someone's money, right? So always consult a lawyer before do anything in investor capital. It's very, very important that you consult a lawyer. So the lawyer will go through the draft something that will not put you in prison, right? Or will not get you what a police case, right? It's very important that you have what a lawyer whenever you are going the investor capital route, right? All right. So now that is it by the way. All right. So when it comes to prop firms, let's talk about gains or leverage. So when it comes to leverage, prop firms have more leverage, right? So when it comes to prop firm, you have more leverage, right? That means you can trade, you can make more profits with your small investment, right? So you have leverage when it comes to prop firms. Remember my analogy that you're putting $100 in your account and you're buying a 10K challenge and you pass it, right? You pass your challenge. Right? Your $100 become $10,000. You cannot use to make more profits. So you have more leverage, right? And you can open bigger position sizes with your 10K account. Unlike your $100 account, you can open some position sizes. But the thing, you can open 2 lots, you can open 2.5 lots, you can make more profit, right? So there's more leverage when it comes to prop firms. You can leverage more, you can make more money, right? So leverage is actually this, right? So it's actually a good advantage for that. And of course, in Tentrade too, you can buy an instant account. So if you buy a Tentrade instant account, you have the 3K account, right? A $3,000 account is how much? Right, it's how much? $100. And there is no evaluation on this one. So this is also leverage too. You use this to get this. So you can it's $110 actually, 110. So there's no evaluation on this one, right? No evaluation. So you cannot simply buy the account, make profits, right? Can be risking $30 per trade. And I think the max further is 9%. So you use your $100 to get what? Max rate of 9%, which is on 9% is how much? 9% is was $270. So your $100 become what? $270, right? So you can see that there is more leverage in prop firms. If you buy this instant account of Tentrade for $110, you get what? 270 drawdown. So your $100 become what? 270, and then you can also risk more and make more money, right? Imagine trying to flip your $100. Meanwhile, you can use to buy an instant account from Tentrade. So you can use the link in the description to get it. So use the link in the description to get the account, right? If you want it, use the link to get it, right? So that is it. It's more leverage. So when we talk about leverage, there's actually what so when it comes to this, actually called less leverage, and of course when it comes to investor capital, also was a pro. So when it comes to investor capital, so you have was leverage because you have was more capital, right? So that's also an advantage here. So when it comes to leverage, leverage is actually an advantage for what prop firms and investor capital because what the size of the accounts, right? So that is it, of course. So now let's talk about another thing. Now, one of the advantages that one of the advantages, right, of investor capital over prop firm is that you don't have to, you don't have to take any evaluation challenges, right? I think that they have medium rules, right? So the rules are not so much when it comes to investor capital and all of that, right? So this is one of the things I love about uh, investor capital, right? The rules are less, unlike profit that you say don't read news, don't open, don't do this, don't have drawdown, don't use this amount of lot size, use consistency rule, all those stuff, right? It's actually what um this it's actually less in investor capital, right? So this is very, very important, right? So it's very, very important. And then when it comes to prop firms, you can grow your portfolio very fast with prop firms, right? Let me put it there. So you can grow your profit fast. So you have faster profits here. You can make profit faster, right? So when it comes to prop firms, you can make faster profits without having to do too much. Imagine that you buy a 10K account and you risk $100 per trade. You're making $200 in a single trade. So you can make faster profits, right? It's faster, right? Without much risk. Also, investors also faster too, right? So when it comes to this, personal capital um, is slow, right? You have to be very patient to grow your account. It's very slow, right? Slow profits. It's very, very slow when you're using what that route, right? It's very, very slow, right? So it's very, very slow when you use that route, right? Now, I'm not mentioning the things I can remember, right? The things that I feel that are important. So now, if you ask me which one is better, I don't feel that anyone is better over the other. I feel that you just have to go through their pros and cons. Personal funds have its flexibility, while meanwhile profits are not very flexible, right? And you know, and another thing you must notice that when it comes to personal, when it comes to prop firms do not have guarantee, so they can shut down. So there's no guarantee, so they can shut down, right? So prop firms can shut down, and they shut down with some money. We have had instances where prop firms shut down with some money. But when it comes to personal funds, it's very rare that a broker closes down. Very, very rare. It's very, very rare that a broker closes down. Very, very rare for a broker to close down. Very rare, right? It's very, very rare for a broker to shut down. But prop firms shut down so easily because there's no regulation. When it comes to personal capital, through brokers, brokers are regulated, so they cannot just shut down like that, right? They are under rules. They have financial companies that look into them. They have all those things that make sure that they are operating well, right? They look at their financial books. They check that their capital left. They actually go through audits by government agencies. So when it comes to personal funds, it's guaranteed, and for investor capital, it's not also guaranteed too, unless you have what a lending agreement, right? So if you have a lending agreement, it's actually an advantage too, right? So you have a guarantee of what? Remember. So remember what I said that when it comes to this investor capital, you should have what a lending agreement, right? If you don't have a lending agreement, that's why you can lose your guarantee. But if there's a lending agreement with a lawyer, right? No one can dupe you if you have what a lawyer that have an agreement where you sign with somebody, right? They cannot take your money and run away, right? If everything is guaranteed, right? It's a guarantee that it's in investor capital, which is not in prop firms, and which is not what in personal funds, right? So that is basically the things I can remember. If you can remember more in the future, I'll talk about them. So now the question is, which one should I use? Personally, I use personal funds and I use prop firms too. So you can use both of them. You can use all three, right? But for me personally, I don't use investor capital. I use prop firms and personal funds because I do not want, Okay, let's talk about this. So now one of the issues now one of the reasons why people avoid investor capital is that they don't use agreements. They just collect someone's money and then they promise things that are artificial, that are not achievable, right? When it comes to investor capital, you have to be very, very careful with it because you can make a mistake that can land you in prison. So when it comes to investor capital, you have to be very, very cautious. Be very cautious of investor capital. Be very, very cautious because you can end up having a police case or landing in prison. So when someone gives you their money, be very careful with it. Have an agreement with the person. Have a lawyer that will supervise it, and then let the person sign the agreement, and you sign the agreement. Discuss four things. Very important. Discuss four things in this. Discuss number one, the drawdown limit. How much will you lose before the agreement becomes void? Discuss profits. Discuss annual returns. How much are you expecting at the end of the month? Don't go and say 10% monthly. It's not achievable. Something that is achievable should be something like 30% a year or 40% a year. Very important. And don't go for broke investors. Go for wealthy investors. Don't go for people that are broke. Right? Go for very rich investors. Right? Very important. Don't go for people that are struggling. Because if your investor is struggling, then he is going to put pressure on you. Go for rich investors. Don't go for broke investors. The people that are struggling. Right? Don't collect money for your uncle that is not rich. Go for people that are extremely wealthy. I'm talking about big companies, big net worth individuals, celebrities that are very rich. Don't go for poor people, right? Go for very rich investors, right? Go for rich investors, right? So you should put your drawdown limits there to avoid, paying back a loss, that you cannot pay back, right? Imagine you don't have money of your own, and then you're trying to go and promise to pay back losses. Doesn't make any sense. The investor should be the one that should do it. The investor should be the one that should take the risk because it's the one bringing the capital. Investor bring the capital while you bring the skill. So there's no point you refunding the loss when you're bringing the skill and he's bringing the capital. So you shouldn't be the one to pay for losses. So you must discuss how much the investor is risking before the agreement becomes null, right? Discuss how much the investor is risking before it becomes null, right? Discuss the profit splits. How much is your take profit? Where you will share profit. Discuss your annual returns, right? Don't say 1 month. It should be 1 year, right? And go for rich investors. Very important. Go for rich investors, right? So this is my submission to this topic. It's very, very important that you choose good proprietary firms, right? So with this, I think that I'll be able to discuss the things that are there. So if you want personal capital, these are the things I can remember for now. If you want prop firms, these are the stuffs, and then if you want investor capital, these are the stuffs, right? So that is just it. So that is it's up to you to decide what you want to use. But let me state something. Your goal should be what? To generate enough profit to put your personal account. So personal account is where your goal should be. So you can use investor capital, you can use preference, but make sure whatever you do, you're saving up in your personal account, because personal account will not go down. There's no rule, right? You're flexible, right? So your goal is to grow your personal account to the level where you don't need investor capital anymore, right? So grow your account and then all of that. So that is it. So have a wonderful day. See you guys in tomorrow's class. Cheers and God bless.